To help us out with a quick analysis and what's the view out there, we have Rajesh Ravi, institutional research analyst, who joins us on the show. Hi, Rajesh. Good morning. Good to see you in. What's your view? Shree Cement, I was just looking at the chart. Actually, the stock had corrected more than 10% from the 52-week high. These numbers appear a little bit soft. The bigger problem is you have UltraTech Cement that's gradually getting more aggressive in North India. What's your take on Shree Cement first?
Hi, good morning, Nigel. Shree Cement, yes, this quarter, they're disappointed on the results. EBITDA is down 10% versus last and consensus numbers. So, as you mentioned in your opening remarks, they are focusing more on value over volume, and that has reflected. If you look at the 6 quarters volume, that has been more or less flattish, whereas the industry has grown at 4 to 5% CAGR in the past 6 quarters. So, and during the call yesterday, the management did note that their focus on value has yielded them in resulting better realization growth even during H1, which is around 9% vis-a-vis the industry. If you look at even UltraTech and all the other reports, results which have come through so far, their realization growth is sub 5% on an average. So that is what is yielding into this healthy margins compared to the industry. However, at some point in time, because the management did hint that they want to grow faster than the industry, this value over volume strategy need to be moderated at some point in time. This is one. Second, on the expansions front, the management did indicate that they are not in a hurry to target that 80 million ton and even can be pushed into FY29 if that be the case.
Okay, so but what is your view on the stock official rating that you have, Rajesh? And also, for the last many years that we have been talking, I think close to around 10 years, Shree Cement always highest multiple is what they get. Now, some of those, those advantages that they have seem to have skimmed out, whether it's with regard to petcoke usage, whether it's with regard to the lowest cost producer, or whether it's with regard to their dominance in North India, seems to be challenged out there. So what is the multiple you give it and what is your target price?
So you're right. We are valuing it at 17 times, and we have an ad rating currently, with 31,000 odd target price on an average 31,000 target price is what we have. And you're right. The valuation multiple, which Shree Cement has been commanding at the top, the top best multiple in the industry, is now even being, ascribed to companies like UltraTech and even Ambuja. Given that these two players have become aggressive on their volumes and margins front also, they have started to deliver strong margins because they have toward the cost efficiencies line. Shree Cement, incrementally the cost saving metrics are limited because they're already north of 60% on green power, whereas others are catching up. So over next 1 year, even UltraTech would be reaching close to those numbers. So that is where the delta on cost savings for companies like UltraTech is much higher compared to what Shree Cement would scale from here on. Shree Cement has guided 100 rupees savings from logistics cost, which they will have incrementally coming over 1 to 2 years.
Okay, all right. What about North?
North Market.
Yeah, North Market.
Yes, North Market, UltraTech in phase 4 expansion, they have announced that they would be adding, out of 23 million ton, large chunk of the expansions will happen in the North and Central market to address the, or peak utilization which the companies are facing in those markets. So that will also have a bearing on everyone, including Shree Cement. Even if you look at Shree Cement performance, while their consolidated utilization would be, for H1, the India utilization would be close to 53-54%. Fair to assume the northern part utilization would be much higher. It is most of the assets in the newer geographies like West and South, their assets are underutilized. And there's a lot of clinker grinding capacities which the company has debottleneck, and that is why the utilizations appear low. So indeed, they will face competition from companies like UltraTech and even Ambuja, which will be scaling up their capacities in these markets.
Okay, very quickly, Rajesh, if you could tell us what is your feedback that you have got on ground. For these cement companies, a little lucky. First quarter is a little soft, then they say second quarter is monsoon, third quarter there's festive season, and that keeps getting kicked down the road. At current reckoning, what is the feedback you've got with regard to demand on ground? What is the demand growth for the industry you're working with? And any price hikes you're working with?
So let me first talk on demand. H1 has been a washout even on a low base. We are looking at 4 to 5% volume growth at best for the H1. October has been a peak festival period, so obviously demand has been subdued. There is hope that the second half should look good in terms of demand, that all the drivers are in place. So, second half we may grow at 7 to 8%, while the industry is looking at 10% plus. I believe most of them, there could be disappointment on those 10% growth numbers, but 6 to 7% growth should be doable. And we are factoring in on an average volume CAGR for the industry at between 6 to 8%. Coming on the realizations front, October, see, post GST cut, not only in cement, even in other segments, companies have clearly indicated that government is monitoring the price movement strictly, and obviously cement companies have said that they have passed on the GST benefits fully. We don't see any price increase happening through in next 2 to 3 months. In
Yes.
fact, there has been some softening in prices in the eastern market beyond GST in the month of October, maybe due to the festive dampness and demand. So at best, we should be working at flattish realizations over next, at least in Q3. Q4, there could be some uptick in the later
Okay.
part of the quarter when demand picks up.
Rajesh, always good to hear your thoughts. Thanks a lot for joining in. And as the cement sector results start pouring in, we'll chat up once again in the month of November. Wishing you a good day ahead.
Thank you. Same to you.
Well, let's get